Today, I want to talk about how the Credit Suisse, AMC and GameStop swaps, now held by UBS, are about to cause the squeeze, and how it won't just be UBS collapsing as a result, but many other Wall Street banks. Trust me guys, I've got some crazy information in this one, so stay tuned and let's make some money. So let's dive straight in with the key information and let's start from the beginning. 741 Trey has just tweeted saying that the New York Stock Exchange and CBOE have charged Susquehanna Securities with creating off-book investment vehicles without notifying the exchanges. So a long time ago, I told you that all trading doesn't happen through the stock exchange, through the market, and through the books. Some trades happen OTC or over the counter, and some even more secretive trades happen completely away from all seeing eyes, over emails, over the phone, or in person. These kind of trades don't impact the price of stocks. They're not regular trades going through the stock exchange through a trading platform. They're not an options trade. They're not even a dark pool trade. They're not even an OTC trade. They're even more secretive than that. So secretive, in fact, that many of these Wall Street banks are creating these off-book investment vehicles or off-book trades, and they're not even telling the stock exchanges. Of course, they only received a small fine, but it goes to show that these super secret trades, not on the stock exchange, not in the dark pools, not in OTC, do actually happen. And that actually, many Wall Street funds, many Wall Street banks, many Wall Street hedge funds are being found guilty of these super secretive trades. Now, on top of that, the Commodity Futures Trading Commission's Market Participation Division and Division of Clearing and Risk today issued a no-action letter regarding the CFTC's swap clearing and uncleared swap margin requirements related to UBS and Credit Suisse. So there was actually a court-supervised transfer, consistent with the United Kingdom laws, of certain swaps from Credit Suisse International to UBS AG London branch. This is obviously those AMC and GameStop swaps being transferred from Credit Suisse to UBS, and more specifically, UBS in London. Not UBS in America, not UBS in New York, where they'd have to report these specific kind of swap transactions to the SEC, but an offshore entity of UBS where shorted shares, where shorted options, where these kinds of synthetic swaps don't have to be reported. And it says here that UBS AG London branch failed to comply with the CFTC's uncleared swap margin requirements for such transferred swaps, and even failed to comply with the swap clearing requirement also for those transferred swaps as well. So this is super interesting. These super secret trades are indeed happening. They're going to offshore overseas branches, and even Credit Suisse and UBS are failing to adhere to margin requirements during these swaps or during these swap transfers. It also clearly shows if they're having to transfer them to offshore branches and if they're failing to comply with margin requirements, that clearly these AMC and GameStop swaps are absolutely massive, and they're causing a massive problem as well. So much of a problem, in fact, that they're causing UBS to fail margin requirements. Now, what's also interesting is that Reese's Politics has said that UBS actually started to hedge their legacy GameStop swaps that they inherited from Credit Suisse in Q4 of 2024. And of course that they'll likely have to continue hedging those swaps with real GameStop shares, or they're likely to implode. UBS, to hedge those GameStop short swaps, have bought over 3 million shares of GameStop and may even continue increasing their position. If they do continue hedging, they do continue increasing their position, it would actually be in their own best interest for GameStop to squeeze, because then they can sell their 3 million shares at that elevated squeeze price. And if they don't squeeze GameStop and they don't sell those shares during the squeeze, They'll eventually be forced to close out the legacy swaps because there's a 0% chance those swaps ever go profitable. So UBS is really stuck between a rock and a hard place. They have tons of these AMC and GameStop swaps, but tons of GameStop shares to hedge. Really, it's in their interest to squeeze GameStop and sell the shares for a profit, because if they don't, at some point they have to close out of the swaps, making a massive mess, because the swaps won't ever go profitable. Now, on top of that, 741 Trey has also done some digging to figure out which other banks would collapse if UBS were to report or close out of the Credit Suisse swaps. And he's found that those names include Morgan Stanley, Goldman Sachs, Jefferies, Nomura, Wells Fargo, Deutsche Bank, and of course, UBS. Now, he found that out actually by going back into the old Archegos lawsuit and delving through all of the Archegos information. It says here that Archegos had disclosed that its long positions and swaps with Credit Suisse were actually representative of the positions that Archegos also held with 6 other prime brokers at the time, namely Morgan Stanley, Jefferies, Nomura, Wells Fargo, Deutsche Bank, and UBS. So Archegos wasn't just holding these GameStop swaps with Credit Suisse, they also had the same GameStop swaps or similarly sized GameStop swaps with a number of other major Wall Street banks. I think it looks like Credit Suisse did hold the largest swap position because Credit Suisse lost $5.5 billion during the Archegos liquidations. But all of the remaining banks didn't escape unscathed. Many of the other banks also lost billions as well. Nomura lost approximately $2.9 billion, UBS $774 million, Morgan Stanley another billion, Deutsche Bank, Wells Fargo, and Goldman separately reported immaterial or small losses. So we know that they had a lot of GameStop swaps also with Nomura at least, and likely Morgan Stanley and UBS as well. So as I've said, when these margin calls do happen, we have very much a knock-on effect onto other Wall Street banks that are also likely going to get margin called as well. We'll see UBS closing out of their swaps, but then Nomura being forced to close out as the price goes up, and then likely Morgan Stanley also being forced to close out as well, potentially even during a forced liquidation. Now, we know these shorts are getting stressed on stocks like AMC and GameStop, but they're also getting stressed on other meme stocks like HTZ, which over the last week, in a space of just a day, over tripled from below $3 per share to at one point over $9 per share. Now, you may remember HTZ from May, June and July of 2021. At one point, HTZ was trading for around 40 cents per share. It didn't just 10x, but over the space of just a few months, it 100x'd to around $45 per share. So we're already seeing these short sellers starting to slip with other meme stocks like HTZ. On top of that, we also saw these short sellers slip once again just last week with the price of AMC, which was showing again at over $300 per share. And somewhere else we're seeing those short sellers slipping is with gold. If you didn't already know, gold has been the best performer since the stock bottom in 2022. We can see gold here compared to a number of different asset classes like the Nasdaq, the S&P 500, the FTSE 100 and others, and gold is outpacing all of them. Especially over the last year, the price of gold has skyrocketed from below $2,400 per ounce to now over $3,300 per ounce. And we can see that especially in 2025, gold is up 26% for the year, and the S&P 500 is down over 10% for the year. And that's why I wanted to talk about today's sponsor, Gold Mining Inc., ticker symbol GLDG, which is currently trading within a few cents of its 5-year lows set during the March 2020 global panic. As of April 16th, Gold Mining Inc.'s market cap is approximately $164 million with no debt. and $156 million of cash and equity holdings, as Gold Mining Inc. owns 79% of USGO and just over 12% of GROY. Gold Mining Inc. holds 9.9 million shares of ticker symbol USGO, quoted at $107 million. 21.5 million shares of ticker symbol GROY, quoted at $36 million, and cash equivalents of $7 million. On top of that, they also have a dozen gold mining projects. When the company originally acquired their dozen gold projects, the peak combined market caps of the companies that held them was approximately $850 million Canadian, which, during the period between 2010 and 2012, was much closer to par with the USD than today. The combined peak market cap was calculated based on each respective company's peak share price during the period prior to acquisition. So to simplify that, the peak market caps of the companies that Gold Mining Inc. has acquired was $850 million Canadian between 2010 and 2012. But yet, the current market cap of Gold Mining Inc. is just $164 million as of last week. On top of that, back in 2011, the spot price of gold was only around $1,925, whereas right now in 2025, gold is over $3,200, over $3,300. And remember, Gold Mining Inc. doesn't just hold these dozen gold mining projects, they also own 79% of US gold mining, ticker symbol USGO, and 12.7% of Gold Royalty Corp, ticker symbol GROY. And Gold Mining Inc. is trading for 84 cents right now, which is near its 5-year lows. Gold Mining Inc., ticker symbol GLDG, owns a dozen projects, containing an aggregate of 12.4 million ounces of gold equivalent estimated mineral resources in the measured and indicated category, and an additional 9.1 million ounces of gold equivalent estimated mineral resources in the inferred category. And ultimately, gold is trading at an all-time high, while Gold Mining Inc., ticker symbol GLDG, is near its COVID-19 lows, down 68% from its 5-year high. So do your own research on Gold Mining Inc. Now, this article from Fortune even says that hedge funds are the new shadow banks, and some individuals are worried these hedge funds pose a systemic threat to financial stability. So it says that shadow banking now accounts for $250 trillion, or 49% of the world's financial assets. Hedge funds manage 15 times more assets combined than they did back in 2008. It says the recent spike in bond yields caused by hedge funds unwinding heavily leveraged trades has some people worrying this largely unregulated business could pose a 2008-style threat to the financial system. Now, this article interestingly goes on to talk about LTCM, which is a business called Long-Term Capital Management. It was a big hedge fund that actually got liquidated back in 1998. It was a big business, a big hedge fund that made highly leveraged bets on arbitrage opportunities in the bond markets, very similar to what Citadel is doing right now with the basis trade. The firm took unsustainable losses when Russia defaulted on its debt in 1998. Wall Street banks helped to organise an orderly liquidation. This means that Wall Street banks helped LTCM to close down its doors, helped to close out of its positions long and short, and helped an orderly liquidation. This is obviously something that Wall Street and the Fed wants to do this time round to try and orderly close out of the AMC and GameStop swaps, but it's something that I don't think is going to happen in an orderly fashion. I think we're going to see the typical every man for themselves rush for the doors as these hedge funds and Wall Street banks fight to stay alive for another day. The smaller fish are going to get fried, and many hedge funds and banks will end up being liquidated as a result. especially as the finance department chair at the University of Pennsylvania's Wharton School said the exposure that we're dealing with right now, he thinks, is much bigger than what we're seeing in 1998. And he said that if these hedge funds do blow up, he said it's going to impact other parts of the financial system, including banks, and then spill over into the real economy. It seems like the economists are finally starting to cotton on to the risk that these hedge funds actually present. But I personally still think these economists are way underestimating the impact that it's going to have and way underestimating the damage that will be done as a result of their illegal acts. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.